Standard Chartered covers a unique population in the world. We cover the emerging markets. In China, in the past 12 months, there are 432 million people who do not have a bank account. In Africa, the situation is even worse. 20% of the population have access to formal and informal banking services. So, as you can see, in these markets that Standard Chartered does business in, we have a great deal of potential to reach these underbanked populations and provide them with banking services. In the emerging markets, the infrastructure just isn't there to have physical bank branches. Now, technology, we see, is one of those areas which can reach some of these people. For example, in Kenya, the M-Pesa payment system is used very broadly, but that was actually developed by a telecommunications firm and not a bank. So technology is there and can be used within these emerging markets to really help give service to the underbanked. Standard Chartered operates in a broad variety of emerging markets. For instance, Hong Kong and Singapore are very developed markets in terms of the banking infrastructure and also the technology financial regulation. But there are a lot of other countries where the financial regulators are not as matured as some of the other developed ones. So within my role at Standard Chartered Compliance, what I'm hoping to do is partner with some of the emerging markets regulators to see whether we can work to evolve pragmatic regulation that can really facilitate the deployment of fintech initiatives in these smaller, more developing countries. In big institutions and in the big corporate world, it's very easy to forget the purpose of banking. It's there to facilitate the commerce of businesses, of individuals, to improve their quality of life. At Standard Chartered Bank, we can absolutely we have the footprint to do that. And now we are putting together the mechanisms and the compliance support structures in order to facilitate that more.